Many thanks for joining us again. If you just joined us, this is Business Breakfast, broadcasting to you live from the studios of iBrand Television, our headquarters in Lagos, Nigeria. It's time to take a quick look at what's playing out in the Nigerian equities market. Before we dive deep down into the analysis and discuss the figures, let me tell you that the market opened for 2 trading days last week as the federal government of Nigeria declared Tuesday the 9th and Thursday 11, 2024 as public holidays to commemorate Eid al-Fitr celebration. The Nigerian stock market closed in the red zone in the trading week ended Friday, April the 12th, declining by 1.09% to close at 638 billion naira respectively. Now, the all-share index and market capitalization depreciated by 102,314.56 basis points and 57.860 trillion naira respectively. However, month-to-date return decreased by 2.15%, while markets year-to-date return printed lower at 36.83%. Meanwhile, a total turnover of 1.132 billion shares worth 28.65 billion naira in 21,921 deals was traded last week by investors on the floor of the exchange. He's a friend of the house, the best analyst you can think of, Ambrose Omodion, Chief Research Officer, Invest Data Consulting Limited, is now with me live in the studio, and we're going to be doing more justice to all of these activities. Ambrose, good morning. It's glad to have you join me on the program.
Thanks
today.
for having me, blessed.
Give us an insight into what played out again in the market. We'll see the market close the past week on the red zone, despite optimism that after the 3 days of holiday, the market might even end the week on the green zone. But then that really did not happen. What would you say are the fundamentals and the sentiment that led to that red closing on Friday?
Actually, for me, I'm not surprised that the market closed red for the previous week. For the straight almost 4 weeks, we have seen a down market. After we have seen a positive first quarter 2024, the first few trading days in the month of April has been more in red. Despite that, this is also an earnings season that was seeing corporate earnings coming. Despite these numbers, some are missed. Why the numbers some also beat expectation? Why some also were below market expectation? Market is bound to react to all these changes in earnings. Don't forget that I always say it on this program that the first thing that price feed on is earnings. If that one that comes not regular as earnings comes, that means those one come once and all. Therefore, me, I believe that what investors are doing now, because we are seeing a higher regime of yield in a fixed income market, it has a way of influencing the equity market. But the good thing is that because we are seeing a little stability in our exchange rate now, become a plus for equity markets. Okay. Why? Yeah, I mean, foreign investors have seen that in other African countries, they have kind of made money in terms of currency trading. When currency, they not just buy currency, invest in currency in the market because of the appreciation of that. You now see huge return. And for that, we're seeing in Egypt and other Africa like Kenya and all those. So Nigeria is the next place investors will be looking at. All eyes investors want to see how stable is this recovery we're seeing, this appreciation we're seeing, and also the reform policy of the government. The physical side and the monetary, how consistent are they? Also, is it yielding the positive result expected? Or is it that there's policy somersault and all this? Foreign investors are waiting. I tell you, when they will swing into Nigerian economy, equity investor will be smiling. And also, the good thing is that also, if you look at the activities in the market, it shows that the big institutional investors like the PFEs, they are not selling their position in the market. That means they are saying that the only place they can hedge against inflation is still the equity space. Although that's why I speak now, there's a focus that might see inflation figure hitting 32.5. No,
some people are saying 32.6%.
Okay.
Other people are even saying 32.5%, like you rightly said. Yes.
If by today now, I did before 2 o'clock, we should have the figures today.
Yes.
As they come and confirm the trend. Also, if we are seeing that the last 2 options we have seen in Treasury B, we have seen a kind of a stable rate, not increasing, not decreasing. It's a pointer.
Let me get you wrap up on your thoughts earlier as we move to other segments.
Yeah, I'm looking at what I was saying, that looking at inflation around the 32.5 as expected, compared to what we're seeing, returns in fixed income market that is below 25%. Automatically, they are in red. Now, the only place we can hedge against is still the equity space, and all eyes are still on Q1 number that wants to be in the market between now and end of the month of April. For me, the pullback is an opportunity for design investors to buy, into good equity at a low price, because no stock market anywhere in the world remain an uptrend. We saw kind of an upheaval or an upbeat in in the first month of the year. That saw a pullback in February. In March, market closed positive. On the end of the day, we saw a positive Q1. Now this is the first trading month for Q2. We are seeing oscillation. For me, investors should not panic, because I know as from end of April, we will now see the position of companies as at the end of their first quarter to give an insight where the company is going. And also look at government policy, either physical or monetary, which sector or industry will benefit from it. We have said earlier that as far as we're having high interest rate, that insurance company and banks will benefit immediately. But we're also seeing that with the position we're seeing in FS now, it's a plus for what? For the manufacturing sector. Because before now, we've seen that they posted negative because of what? FS loss.
But now, to bottom now, how is an appreciation in the foreign exchange market a plus to manufacturers who don't even have access to foreign exchange, to dollar, to import raw materials?
No, actually, if we are seeing the dollar is coming, I tell you that there's a volatility of dollar, because we learned that the British change have been given 10,000 every week.
Yes.
That means we have access to dollar now. That will be a plus for the manufacturing sector. For me, what matters is that the hike in tariff is what I believe that is going to change the scenario, because cost also be pushed toward to the final consumer. That is why, as a trader investor, look at which sector or industry that will be able to successfully push their cost to consumer and still push a better number. That's why, as we are seeing Q2 number, it becomes important for you that we must know where the company is going. It's very, very important.
Okay, give us more insight now, so try to wrap up now on what's playing out in the fixed income market. Despite the appreciation in the foreign exchange market, the Naira gaining more momentum over the US dollar. We're also seeing the price of food commodities still on the high side. And I really don't know if a bag of rice has really reduced. The last time I bought it in February, I bought a bag of rice at 88,000 Naira. And many Nigerians are already complaining that why are we seeing some kind of stability in the foreign exchange market, but it does not cut across the board when it comes to commodity prices?
Well, it tells you that we Nigerians are part of the problem.
Okay.
When we are not a dollar economy, when people are pointing to the dollar as if we are importing all the things within Nigeria, they are still locally produced goods. But
I have a report, sorry to butt in, I have a report that even imported products are even more cheaper than the one produced locally in the country.
Yeah, but I believe that, yes, since we are seeing less pressure on the FS now, and also it's not that Nigeria has been able to produce in the last 2 months to meet even the budget, the projection for the budget for 2024. Not talking about OPEC requirements. So, yeah, for me, say that we need to work on that, but that will help us also to rake in more dollar. And at the end, don't forget that this market where we are trading or where we invest, it's market that is mix of long-term, medium-term, and institutional investor all playing in the same market. The when institutional investors are coming, or foreign investors are coming, because of the exchange rate today and the low valuation of our equity, I believe that will also change the face of the market. But don't forget that you can't separate the economy from the market. And that's what that means. Companies' performance or business result is very, very important. That business will come what is happening in the economy. That's why I said Q1 number is very, very important. We have seen that for the month of February and March, we saw the purchasing manager index that remained flat. There was no expansion because most of the companies' goods are still remaining on the shelf because of high prices of these goods. For me, I believe that going forward, it's for investors to know where to pitch your tent. Not to follow bad wagon. That's why
the bad wagon.
That means that as the investor or trader, you must have a goal. Trade your goal. And that's what once we look at that, you must have access to what? The right information. Have the right tools and the right mind to invest positively. All
right, it's the beginning of another trading activity at the exchange this week. Hopefully there won't be any holiday this week. So let's get your projection. What are you projecting? How do you see the market performing this week? Are we going to start the week on the red, or we're starting the week on the green?
Yeah, I'm likely to start the week on the green, but we expect to be mixed trend, because the more we start seeing first quarter results, people will start pushing, oh, this company have done well in first quarter. I mean, this trend is going to continue for the year, the current financial year. If not, I want to exit. You see, in this month, towards the this week and towards this oscillation that we've seen at the beginning also remain. But at the month of May, in Nigeria, for the month of May, we've seen that for straight 5 years, they have defied sell in May and buy in October. That means if that trend continues, and don't forget that it is May that we expect the government to mark that 1 year in office.
Yes.
And if the government is surprised that on that day to the representative say positively remove, what will happen to the economy? We'll see inflation, interest rate, 100% drop in the next MPC meeting. That will change the face of the market. As I said, everything is against the future. That means for investor, when we are planning investment, think of what will change in the market. For me, there's no cost for line.
Finally, now, how do you think monetary policy reforms have really shaped the market in recent time?
For me, the successfully just kind of put the private sector, in a dark because cost of fund have increased for them. Not that access to fund, because I tell you, because of the economic situation, most banks will not be able to lend to some people, apart from the same category of investors or companies, because if they lend to people that will not, at the end of the day, that will shoot up their non-performing loan, it's that for them, the banks will always be playing at the door of CBN with their treasury bill and all those stuff, because the banks are there to make money. If I give you money and you didn't pay me, at the end of the day, what will I tell my investors?
So in other words, now the economy is not recovering.
No, that's why,
because the president actually said the economy is recovery, and we're not really feeling it, and we're not seeing it.
The little indicator that shows that, I said for the two last quarter month for the first quarter, February and March, also purchasing manager was flat for 51. It says that there's no expansion. Where are you seeing the recovery? Because what will really bring out the issue is when we see the GDP for Q1, already we have seen inflation at the peak. We have seen interest rate at the peak. Then also when we see the GDP, tell whether we are contracting or we're expanding. For me, it's people that are already on the contraction stage of the economy.
All right, we'll leave it at that. I'd like to say a big thank you to you, Amber Somodio, Chief Research Officer, Invest Data Consulting Limited. Thank you as always for your time with me on the show.
Thanks for having me. Blessed.